Hello and welcome back to Coinscrum for our regular Friday market wrap. As always, here with Nick Mancini, Chief Community Officer at Trade the Chain. Hi Nick, welcome back.
Hey, how's it going? Happy Friday.
Happy Friday. I hope the sun rises for you soon. I'm sure it will. It tends to most days. We have real problems if that doesn't happen. There's enough going on in the world for us to worry about. So let's stick with crypto, the thing that we worry about most, I guess. Bit of volatility back in the markets, things been trending downwards. Various bits of news to discuss, which we'll come on to. I guess interestingly, at the beginning of the week, we saw some wobbles in the stock markets on the back of news coming out of China with the Evergrande situation. And, you know, as we've seen in the past, it's always an open question. Bitcoin and other crypto assets followed the stock markets down, kind of risk-off scenario. And it's always been an open question whether, Bitcoin's going to, at some point, act as risk-off or risk-on. We'll see. Remains to be seen. So interesting movements. Lots to talk about. Where do you want to start? Any bullish news out there? There's one or two bits of good news this week.
So I think the major umbrella that has to be mentioned is obviously the Evergrande news, and that didn't get mentioned directly in our news drivers, but Evergrande was clearly a downward pressure on the market for pretty much the past week. So just like you mentioned, crypto and equities have had relative correlation for pretty much since the Fed really started to prop up the economy, for pretty much every central bank, I should say. But the Evergrande situation really weighed on us. So it's worth mentioning, but obviously the expectation is that it's kind of going to be choppy, but, not a Lehman or even, close to a Lehman style event. Mm-hmm. So the idea is, once we kind of get some more news on that, then that'll kind of blow over and the rest of the news that we discuss will become a little bit more important. Yeah. So what probably caused the volatility today, we're thinking is a combination of Bloomberg reiterating China's ban on cryptocurrencies. I mean, I don't know how many times China can say this in a year and still get news headlines, but they do. So that obviously created a shock to the market. But interestingly, it happened right around the exact time that 76,000 Bitcoin options contracts expired, 2/3 of which were calls, 1/3 of which was puts. So that created a massive amount of volatility as traders close their options, then have to maybe close their spot bets as they're hedging their options. Mm-hmm. They could have had to redeem shares. They could have had to sell shares. It looked like a lot of selling was happening for maybe some very bullish calls. Mm-hmm. So that's more or less what a kind of a 1-2 punch of just a big technical factor, as well as a kind of a fundamental surprise that kind of exacerbated the sell-off this morning. So there's a bit of the Evergrande news coupled with some weird news to really send us into a spiral into the weekend. But because the China news is just a reiteration, and because we knew that options were going to create volatility, this actually might create a great buy opportunity or trade entry opportunity if you're a potentially a leverage trader.
Yeah, I mean, we'll come on to it when we look at the technical charts later. I mean, we're kind of hovering down at levels that you identified as potential support, kind of held a couple of times this week. I know Ethereum's been weak, particularly this morning. But we'll come on to that. There has been some positive news. Twitter made some announcements this week.
Yeah, Twitter actually just yesterday officially announced that they've enabled Bitcoin tipping for iOS users. So if you're on web or have an Android phone, not available yet, but through Strike, which is a company that enables payments on the Lightning Network via Bitcoin, or I should say Bitcoin payments via the Lightning Network would be the better way to say that. They've enabled tipping for Bitcoin on Twitter. So you can go and do that now. If you have an iPhone, tip your favorite person, have your friends tip you. That's great news. And then the next idea is that there's going to be NFT verification. So big bullish news for Bitcoin. We obviously saw that happen in the charts yesterday before everything went down this morning. But also good news for Ethereum because their plan is that they're going to add NFT verification. So that only solidifies Ethereum as the NFT platform, at least for the near term. So, very good news, at least for the adoption front on Bitcoin and Ethereum.
Yeah, no, I think that is good. And look, some of these, I remember there was a tipping service on Twitter maybe back in 2014 that launched. And it's all about timing. That was a centralized service. So this is a step beyond having it operate on Lightning, puts control back in the hands of the users, as is, hopefully the intended benefit of utilizing Bitcoin and other crypto. So definitely a step forward. Great to be getting that direct support from Twitter. We'll take that positive news this week, definitely. Let's go something more neutral, ongoing, I guess, as well. SEC have been in the news a lot, especially with their standoff with Coinbase. Any developments there?
Yeah, so Gensler has been making, or Gary Gensler, who's the head of the SEC, has been making some headlines, certainly for his comments and his actions recently. So the biggest one was probably Coinbase actually announcing that they were going to not move forward with their lending product because of the SEC lawsuits. And I would encourage everyone to look at Brian Armstrong's tweets as soon as that happened. He kind of did something that was more or less unprecedented. Many debated whether it was wise or not, but still, end of the story is Coinbase will not be moving forward with a lending product. And this is more or less because of the SEC. Now, the SEC is also via Gensler in multiple, I don't want to call them, there was a hearing. There was also an interview. There's been a few other, let's say interviews or at least talking points of his in which he's mentioned that stable coins need more regulation, but he's not entirely sure what jurisdiction they fall under based off of current US law. But he does feel that most cryptocurrencies, if not all of them other than Bitcoin and Ethereum, are securities, which would be fitting a round peg into a square hole, if you ask me. There needs to be new kind of laws, or at least, a new function for these types of assets, because they are obviously hybrids, and you can't just say, because this is 20% a security based on the Howey test, we're going to make it 100% a security. I don't think you could do that for anything in life, but we will see how it turns out as Gary continues this kind of verbal assault without actually doing anything in terms of creating rules and regulations that the SEC will then enact. So I think they're waiting probably on the Ripple lawsuits. I think to maybe move forward. They're attacking some other people who aren't registered, but the big cloud over the head is, are these going to be securities? And clearly Gensler is signaling that's his desire, which obviously gives you a hint in where the SEC is going to move in the near term.
Yeah, I mean, it's a tough battle for them because, look, as we know, these things are global. They operate globally. Yes, development teams can be, or companies can be based in the US and have to conform with US laws, but they can equally move. At the same time, you've had the ongoing regulatory framework under development in Europe, which seems to at least be a more, considered approach to identifying what these are and, creating specific rules for them when needed. Yeah, they might not be perfect, but at least that's a framework, and there's an open forum for discussion and debate. Over time, if Europe becomes a more friendly jurisdiction for this, it will win out. And the US has got a good track record for supporting innovation over the years. I think they've done a pretty good job on that. So we'll see. There's going to be, as I think we've said before, I think we're just at the beginning of some of these regulatory battles and debates, and we'll just have to keep an eye on them as they unfold. So what else have we seen? Anything else? Yeah.
So nothing else crazy, but I think a big thing that I want to leave our viewers with is just the idea of, democratization versus authoritarian, or let's say communist governments. If China is outright banning something that is free and democratic and consensus driven, for the fear that it will have negative impacts on their communistic, very controlled, fit into a box style economy, that should only give America and Europe more, let's say, confidence in the future of cryptocurrencies and what they do for humanity. If the villains of the world are more or less banning something out of fear, then the heroes of the world, as we like to call ourselves, should be supporting it out of the pure desire to continue to expand innovation, as well as make human life better beyond what we've done over the past, 100 or 1,000 years. So this is the general consideration: is if bad guys don't want it, it's probably something that the good guys should probably look at under maybe a softer tone, because China is doing it not to protect and help, it is to secure their authoritarian regime for longer. So I think that's just an important consideration everyone should understand.
Yeah, well, that's most people coming into space see those opportunities. I'm still a strong believer they will pan out, and it's like water flowing down the river. It's just going to kind of bypass anything that stands in its way eventually. But it's whether these things are delayed or allowed to flow free.
You can build a dam, but that won't last forever, right?
Exactly. Right. Well, let's go and take a look at, there has been movement in the markets, and, different opinions out there. So I'm guessing sentiment is hopefully reflecting some of these different opinions, whether things have turned slightly more bearish. Let's start with a Bitcoin sentiment chart.
Yeah, so I'll have to admit that I was a bit wrong last week on my my past week sentiment prediction. We were tipping bullish going into the weekend, but quickly turned bearish heading into the weekend and obviously into the week as the Evergrande news continued to hang over our heads. Obviously, we didn't get news of them actually being able to make payments, I think, until Tuesday or Wednesday. So obviously Sunday, Monday, Tuesday was very worrying for many people, especially with China having a holiday. So I was wrong. I'll admit that. Sentiment was down. Price obviously fell in line with sentiment. Sentiment is picking up, very similar to what we saw last week. So I'm not going to go out on a limb and say I think that sentiment is going to continue bullish. I do think we will probably float around neutral levels, at least for the rest of the day, maybe in that kind of red bearish territory. But again, I'm sticking to my guns with the fact that this sentiment reaction is obviously not as extreme as the previous one, due to, I think, this reiteration of the news is just something that the market is going to digest quickly, rather than Evergrande was something that literally you had to be uncertain and risk off to trade correctly. So I think this is one where I think a lot of people are going to see, as we'll talk about the technicals, it's in a good area, and they like the idea of what just happened with sentiment to give everything a bit of a reset after a bit of a topsy-turvy week. So that's how I'm looking at it. Cautiously optimistic.
Okay, well, let's move on to Ethereum. I think the sentiment and price action are pretty well correlated here, so slightly more bearish looking.
Yeah, so the thing is that Bitcoin and Ethereum are going to be very closely correlated, but Ethereum is still worth talking about independently because of its control over more or less ERC20 assets and kind of the DeFi and NFT market. Obviously, we just saw Ethereum tanked last week or this week that we're discussing, and then the NFT market kind of more or less took a hit as well because no one's trading NFTs if they're fleeing Ethereum for dollars and things like that too. So something to be aware of, for alternative asset investing as well. But Ethereum does look a lot more bearish than Bitcoin does right now in terms of sentiments. I do think that they will move more or less in line in terms of price action. But I think we're going to see we are going to see a very interesting chart for Ethereum in terms of dominance that may spell what the future looks like. So based off this chart now, we do know that sentiment could reverse around these levels, but I think that Bitcoin might be a better look than Ethereum, at least just in the near term as we get over this kind of risky trading session with all the news going around. So we'll see that chart moving forward, but they will be more or less in line in terms of general movement moving forward, which is an important consideration and distinction versus the dominance.
Yeah. Well, I think the other thing to remember, that these things don't necessarily guarantee any kind of future outlook, but September's traditionally been quite a bearish month for Bitcoin and more recently other cryptos as well. So we're getting towards the end of Sep. Maybe we can move into October with a bit more of a spring in the step, but we'll see.
Speaking on that, I think I read a report for the past 23 years. I think the 3-week window for the second week of September going into October has been bearish for 23 years, at least in equities. So that's so this would be the 24th that we're going through. So just an important fun fact for everyone who's trading.
Yeah, yeah. Okay, well, we looked at the sentiment. Let's move on to the technicals for Bitcoin.
Yeah, so Bitcoin technicals, anyone who's been watching this show long enough should know that I love my channels, and I have drawn one here. I've extended out the previous, let's say higher or lower low, because what we're seeing right now in the entirety of this chart is, to me, a giant bull flag. This looks like something that we have a 45-degree angle heading north for basically July through the beginning of September. We have a perfect retracement to about the 50 fib, which is 50% of the previous movement. And we're bouncing on the 200 moving average with a technical formation that still makes a bull flag valid, because we have the two bounces and the two tops on either end of the trend. So I'm not expecting, giga bull right now. I'm not expecting billionaires to come out and start just buying Bitcoin left and right. So I think the green option is probably a little bit more bullish. But obviously, if things do get crazy, that's where things would go to the top of the channel, consolidate, hopefully lift higher into that big liquidity level we can see around 48K. The most likely level is more chop around the center of the trading range. As you can see currently, Bitcoin literally found support at the center of the trading range, which is very good considering how long standing the range is since the beginning of September. So it's playing the range perfectly, and a neutral kind of bounce around the center of the trading range, hopefully with lifting up maybe towards the end of the weekend, would be very positive to see given the recent price movement. We want to continue in the trend, and ideally we want to stay in the top half of the trend to continue with a bullish look. So we've got a lot going for us here, but in the 200 moving average bounce is big on key liquidity levels, but clearly we're not out of the woods yet. And the bottom of the trading range could be in our future if we continue to see maybe more bearish news or increased selling throughout the day.
Okay, that will make sense. And what's that looking like for Ethereum?
So Ethereum is a bit different. I mean, I guess at the end of the day, you really could chart this more or less the same, but the deviation up top is much greater than Bitcoin. So I didn't feel that calling this a picture perfect bull flag felt right, because it really technically isn't. So what I did is I drew the Fibonacci levels for the entire Ethereum movement for basically what I just displayed for Bitcoin, that lower low to the higher low or to the higher high. And what we can see here is that Ethereum is basically playing in the core fib range to perfection. So the core fib range is that 38 level to the 618 level. And that's basically just the deviation around the center of the entire movement. So what we can see is that Ethereum first dropped to the center, then it found the 38 fib, then it went back up to the 68 fib. Now it's back down near the 38 fib. So it's literally just bouncing in this range. So you can tell that this range is going to obviously be very, very important this weekend and likely next week. And we can see that, the 618 range is clear resistance. The 382 range is clear support. So where it's going to be chopping. It's just, is it going to break up? Is it going to break down? Is it going to keep chopping? So that's really just what this is saying. And if it does break up, we would probably see consolidation around the 618 fib before moving higher. I think chop is likely around the range as shown by orange. And if we break the 200 moving average and break the 38 fib, then we're probably headed back down to the next fib level. So this is just very clear and perfect for technical levels of where to trade with potential movements based off of their general likelihood. I think, again, with Bitcoin, the neutral level is probably the best, but time will tell.
Yeah. I'm sensing choppiness, more choppiness for now. For what it's worth, what my views are worth. Okay, so I think, as we've said before, we've seen some clearer indicators from the dominance charts that we've been looking at in terms of potential overall direction, and especially in terms of relative terms, but overall as well. So let's start off with the Bitcoin dominance chart, because I think there's some levels here that look interesting.
Yes, and this is a great example of what happened last week with what we're going to look at the Bitcoin dominance. So coins dropped for the most part due to the Evergrande issue. But when we talk about strength, it's, if you were more in Bitcoin than you were in Ethereum, you got less hurt. Ethereum dropped from 3,500 to 3K. Bitcoin was only, I think, what, like 44 to 41. If you think about the percentage wise, Bitcoin was the better, I guess, asset to sit in if you had to suffer. So if we're looking at the Bitcoin dominance chart, Bitcoin dominance technically continued moving up throughout the week. Obviously, it took a bit of a dip down over the past few days, but it did continue moving higher and is showing strength at this key support level around 41%. So right now, Bitcoin dominance is showing strength, meaning that even if prices go lower, Bitcoin is probably going to not hurt you as much as holding another asset will. And if asset prices move higher, then Bitcoin dominance is likely, or then Bitcoin is likely to be a worthwhile investment in your portfolio. So I'm not saying ditch your Ethereum. I'm not even saying trade Bitcoin more heavier than Ethereum. I'm just saying the trend right now is showing that Bitcoin is likely to show more strength. So if you are trading one of the two, you know how to treat it if this trend continues. So I don't think that Bitcoin will break, or Bitcoin dominance will break below 41% this next week. I could be wrong. I think it'll continue to float in the 41 to 43% range.
Okay, well, let's move on to the Ethereum one, because we've been definitely tracking this pattern for some time, and we see a clear break. So that relative strength of Bitcoin certainly showing here as well. Talk us through this chart.
Yep, and I told you last week if Ethereum could not break that moving average that was showing resistance, it would likely come back down to the bottom of the formation, and it completely broke the formation as well, which showed just how weak Ethereum was in the market this past week. So, wasn't 100% correct there, but at least my warning label ended up being worthwhile. So I've drawn the next support level where we will likely see Ethereum dominance find support around 17%. So when Ethereum dominance is finding support, I would probably look for Bitcoin dominance to find resistance. It's natural that would probably happen. Doesn't mean it's going to happen. But the first thing I'd check is if I see it continually inching down to 17.00%, the first thing I will look at is Bitcoin dominance to see how it is also reacting in the same time frame to then gauge how I want to trade.
Okay. And so moving on to the others dominance chart, everything else in the market which impacts and has been showing relative strength versus Ethereum, Bitcoin recently.
Yeah, it took a bit of a dip last week, obviously, and I think we said that too. We saw that kind of consolidation coming up, and we were like, it doesn't look like others are going to have the most strength coming forward. So fortunately, we were correct on that. And to draw the bull flag. I don't call out bull flags just to do it. It's probably one of the most bullish and serious formations, at least for me technically. So when I say that, the Bitcoin is forming a bull flag, this is why, because things like this generally push to the upside with general accuracy. So we can see what others dominance did. It found support on, I believe, the 50 moving average. It moved up. It looks like it's catching. And hopefully we continue to see consolidation for alts around the 14 to 15% range. Because what that would do is it would maybe allow Bitcoin to show some strength, have some fun, throw some gains out there. And then others, random altcoins or, even the large cap altcoins, they consolidate, whales and retail accumulates. And then we have another cycle moving forward into Q4. So I think some altcoin consolidation here would be very good. Even potential downside would be good so that other people can buy in, market gets a bit of a chance to reset. So I'm expecting to not see altcoins go crazy. I'm expecting to see altcoins maybe continue on a current path, volatile, but not crazy upside like maybe we've seen the past, 6 weeks.
Okay. All right. Well, we can finish up on that as always. Nick, thank you for joining us again. We will see how this all transpires over the coming days, and we'll catch up again next week.
Well, I appreciate the time, Paul, and hope you have a great weekend.
We'll do so. Have a good one.
Okay, so I'm going to